We got a cluster today. In fact, we got a cluster on 2 of the 4 major indexes. I'm going to show you, I'm going to break down what it means to get a cluster now versus a cluster, say, a month from now. And does that change things? Does that make us more bullish? Does it make it less bullish? I'm breaking that down, as well as for some of you, what the heck is a cluster anyway? Today's trade idea has a cluster. What does that mean for the type of trade we want to do there? So let's go ahead and get started. Today is Wednesday, July the 18th, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, thanks for tuning in. Glad to have you with us tonight. Welcome to those that are watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel by mousing over the Market Scholars logo in the bottom right corner of the video. Click the red subscribe button that pops out. Also, click the thumbs up icon that's down below the video. That tells me 2 things. You like the video tonight, you want us to keep doing it. Comment down further below on anything that stands out to you and what you learned or what you have questions on from tonight's video. Join our daily Market Outlook email list. There's a link popping out in the top right corner of your screen. Click on that link to subscribe. Follow me on Twitter for more content like this throughout the day, and join our Market Outlook community on Facebook. All right, let's start off taking a look at the S&P 500 with the market forecast indicator. You can see we got an overbought cluster, and we got an overbought cluster. Remember, we got above 50 on the intermediate line right here on July the 9th. So we are just a little more than a week into this intermediate run, and we've got an overbought cluster. That's actually a good sign. Now, if we were a month or 2 into an intermediate run and we got an overbought cluster, probably not the best sign at that point. But considering that we're just starting a week plus into what we expect to be 1 to 3 months, of course, anything can happen, right? But, we expect it to last 1 to 3 months based on what we've seen in the past. Then to get a cluster like this, which, again, there's a common misperception that that's a bearish reversal signal, and the reality is it might be a reversal signal in the near term because the near term line's been above 50 now 10 days. So the near term line, we don't get a near term pullback, but this actually solidifies the intermediate trend that's just this intermediate run essentially that's just starting. So it's a positive sign. So we didn't get one over here when this one started, but we are getting one now. So good development for stocks to get that indicator. Again, it means the bulls are in control across multiple time frames here today, and then the short term, and then of course the intermediate term. And you can see even market sentiment line continues to move up and is close to being above 82. So a good bullish trend. We're above a rising moving average. I've mentioned before, you look at, how the markets are going globally, and, you look at just how today is performing, and you look at the intermediate posture, the intermediate trend. It's kind of hard to be too bearish when you're the only show in town right now. And we'll look at that more here in another segment. But the posture remains bullish. The Dow Jones Industrial Average, has been up 9 out of 10 days. So the intermediate line is rising. The market sentiment line is rising, not to the same extent as the S&P. It's been lagging behind a little bit, but you can see the near-term lines entrenched in the reversal zone. We bounced off of that low point from last week. There was that low point last week where we pulled back. We talked about the expectations for a near-term, short-term bounce. We got that. On the Dow Jones Industrial Average, not only did we get that, we got that for 5 consecutive days. We're not above these highs yet. You see with the S&P 500 we are. So it's lagging behind just a little bit. And both of these are lagging behind the NASDAQ, which has led higher and also got an overbought cluster just a week into its own. And you can see its near-term posture, its near-term sentiment, short-term sentiment has been above 50. The near-term line, in blue has been above 50 for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days now. So pretty decent expectation we get a short-term run. I would expect probably by the end of the week, we got 2 more days left, that the near-term line will start pulling back, even if that just means stocks go sideways heading into Friday's expiration. So again, simply because of how mature the near-term run is, in this cluster. Getting a cluster early on. See, getting it at the end of an intermediate run is a good reversal signal. Getting it early in the intermediate run, not a reversal signal. You can just see that in the last intermediate rally. And how long is an intermediate run? Typically, intermediate rallies last 1 to 3 months. So here we are a couple weeks. By here, we were more than a month into it. So we can start looking for those reversal signals there. And same thing back here. Back last year, we got a cluster around this time. Again, this typically, this time of year is typically a bullish year. Bullish time of year. Really quickly show you the Russell 2000. You can see, we talked Monday about holding the importance of it holding that support and bouncing, and that's what we've done. The near-term line has bounced. We're closing above the high of the low day. The intermediate line has turned back up. It's not the most bullish, but it's definitely got catching up there with market sentiment already being above 80. A little bit of a cup and handle formation developing potentially on the Russell 2000. But you go back to the S&P 500 and take off all these and look at the seasonality chart for the S&P, and you can see this is this is the time of year from early February on up to now to July 18th. There's a pretty decent move on stocks. We typically go from what is on average, and let's actually go 20 years. We typically go from what's on average about a 1% drop. You're usually down on average about 1% in January, but by early February, first week in February, we go from what is on average a 1% loss to what is on average a almost 4% gain, 3 3/4. So this year we went from 4.5% loss to a 4.5% gain. So that's a pretty decent move during what's typically a bullish time of year. We are now heading into what is typically more of a bearish time of year. So now keep in mind, if we take a look at last year, just because we expect that seasonality from now, basically July expiration until second week in October, just because we expect that doesn't mean it has to occur. You can take a look at last year as an example. Here's last year as an example. So we peaked right around July 18th. We got a cluster even, overbought cluster. We went sideways, which is kind of what I'm expecting us to do here. We went sideways for a while. Then we had a little bit of a shallow intermediate pullback here with the intermediate line dropping below 50. And then by the second week in October, by October the 11th right here, we were actually much higher than that July point instead of being significantly lower according to the seasonality chart. So yes, seasonality will lead to some weakness. How big the weakness is, considering that we're getting a cluster a week into an intermediate posture, I don't think necessarily we'll get the kind of declines that we've seen on average. I think we'll probably be a little bit better than average. Still some weakness. I mean, this was better than average. Still some weakness, but somewhere in there. But I expect that we'll have a decent run, that this will continue, this intermediate posture will continue, because this cluster kind of gives it its stamp of approval. Again, getting a cluster after a month and a half into it, that's a worrisome sign. After a week into it, very positive sign. All right, just a reminder before we look at the other charts here that you can watch our Market Outlook videos on the Market Scholars blog. There's a link popping out in the top right corner of a video. Click that link. That will take you to our blog. And, of course, click on today's post, and you can just watch it from here. We do ask for 3 clicks while you're on this page. One is, if you have a Twitter account, click on that like button. You can do it while you're watching right now. Number 2 is click on the Facebook post. That will take you to your Facebook account, and you can like today's Market Outlook Facebook post. And then 3 is liking it here. The more, clicking on that icon, the more you do these 3 things, that tells us that you want us to keep doing these videos on YouTube. So it's kind of a one-click feedback. Really, really easy way, 3 clicks. The other thing it helps us with is it basically is your way of recommending that others should be watching it too. And Twitter and Facebook will see your clicks and promote this type of content to other people that are looking for this type of stuff. So it's a really easy way in 3 clicks to give us feedback and to help recommend this to other people to watch it too. All right, and two, quickly, remember to subscribe to our Market Scholars email list. There should be a pop-up window that pops up there, and you can also do it at the bottom of today's blog post. But we had one oversold cluster, and we probably had about 15 overbought clusters. I'll show you what those stocks are in that email, so make sure you subscribe to our daily email list. We take a look at the long-term lines here again. Rising above and upward trending 50 and 200-day moving averages. The MACD is rising again. You can't really have a more bullish pattern than this on a long-term basis. Of course, shaded green because 50 is still above the 200. You can see the Dow Jones Industrial Average is back above, the Nasdaq and the Russell, all of them showing very strong patterns there. You look at the 3 green arrow charts. S&P's got 3 green arrows. The Dow Jones Industrial Average, the Nasdaq, and the Russell 2000 now back up to 3 green arrows. See, it didn't. I had 2 red arrows on this little short-term pullback, but like I said, cup and handle formation developing with this touch of the moving average and that Fibonacci support on the near-term basis. You look at the 2 line versions, you can see we're above that rising 8-day moving average. So we continue, as long as we're above a 8-day rising moving average, and the MACD, you can see in stochastics, even the moving averages are still rising. It's a positive development for stocks. Again, the momentum is strong. The buyers are in control. We're above these moving averages. So bullish patterns from a technical perspective across the board. We formed a higher high, and just barely, and it was more towards the middle of the end of the day, and we didn't really push up high strongly to a new higher high, but we got up to a higher high. We obviously had a higher low point up above this last week's high, so we broke up above it yesterday, came down and touched it a little bit today, bounced off of it, and a new higher high. The 4-week high point was at the end of the day, so very, very positive development. We're easily in the upper half of the chart here, and this upper half's not going to change for another week or so until this starts to move up. And you can see it'll be somewhat gradual when it does that. So I think during this period of time, we'll get that short-term pullback. And then as it starts to tighten up, you'll start to see us push away. It's kind of hard to push away to strong new highs when the gap is already relatively large. So the gap needs to tighten up. Not too much, because then that's bearish when it tightens up too much. But it needs to start tightening up, and then we can start to widen it back out again with stronger moves to the upside on a short-term basis. Now, when you look at the, that we talked about, let's see here. Sorry. Let's go to the daily chart here first. You can see the volume at 44 million coming in well below the average there. And, again, this is summertime. That's the nature of the beast right now. You take a look at today's ATR, very, very small ATR. So half of the average, 1.12 points. So you look at that on average, and you can see below a falling. Today's volume is below a falling moving average at the lower end of the 52-week range. Half of the ATR on an absolute basis, and it's falling with more room to go before we get too complacently bullish. And then on an relative basis, we're in the bullish zone below 1%, and we're continuing to fall towards, again, the low end of the 52-week range. All these patterns are bullish for equities. Finally, we'll take a look at volatility. Volatility was back down below 12. We popped up a little bit, and then we filled in that gap. It's trying to figure out. I don't think. You're going to get this kind of move right now on volatility. I don't think we'll get too much moves to the downside. You can see, that how complacent we were in 2017 and how low volatility got. I don't think we'll get to those lows. I think we'll kind of hover around these areas, which means that our moves will be even that much. We won't get extreme moves to the upside. It'll just be slow. It'll be painstakingly boring, but that's what you get in summers, in summer times. Look at on the average basis here. Where is it? Right here, and you can see. We're getting lower, but this year we have just not gotten down to an extreme. And I mentioned this in class today. in my options inventory class, you can see that back here, we didn't get extreme lows in late 2015, early 2016. We were coming up off lows, and stock was coming up from below the 200-day moving average. Then things really got complacent heading into the election of 2016, and then of course all of 2017. You can see how long the volatility index stayed in the bullish range, which is below that brown channel. This is the bullish range, that's the bearish range. Few spikes to the upside. And then this year, at the beginning of the year, how much we stayed in the neutral and bearish ranges before coming back down, and again, not getting, similar to what we saw in late 2015, 2016, not getting into that extreme range. And in fact, if I were to even go further out here, so 2000, I've compared this kind of market to 2014, 2015, where those long-term moving averages started to contract, where the long-term trend started to get really mature. Well, you notice we never got to an extreme lows on there, and that's kind of the viewpoint I see us heading in right now in terms of volatility. Still bullish, because the market was still bullish, but it was a grinding bullish trend. And we didn't get, it wasn't like the big strong moves that in very little, strong complacency, very little pullbacks in 2017. I don't think we'll get that type of move again, because we're now in this kind of higher regime of volatility, a regime of higher volatility. So to summarize, we're bullish, we're strongly bullish, we are seasonally strongly bullish. We're heading into the last stages of that, into a seasonally weak period. But we got that stamp of approval with that overbought cluster today early on in the intermediate run, which suggests that this intermediate run may have some legs to it in terms of another few weeks to another few weeks plus a month, right? That would give us to that 2-week mark or 2-month mark. So now that might not be, like January bullish, but it will be summer, July bullish, which is typically slow and grinding and boring, and a great time to essentially take vacations, get out of town, and come back and see what happens when volatility picks back up in August and September, early October. So what do you think? Do you agree with that posture? Do you disagree with it? There's a link popping in the top right corner of the video. Click on the poll. Click on that link. It will take you to a poll. Open up a poll and then hit either agree or disagree. And if you click on disagree, let me know down in the comment section what you're seeing that would suggest maybe that we should be more bearish than what we're seeing here because of this or that reason. Let me know what those reasons are down below. All right, today's focus on the calendar in terms of what's driving the price action today was the housing starts number came out, was much lower than expected. So that really put a damper on the real estate market. If you take a look at the real estate market here, that was the worst performing stock today. In fact, if you take a look at, it's been lagging behind as it was already. Here, 1 second, let me get that, link that up here. You can see it's been lagging behind already, but now, and it's still at support, so it's not like in a bearish move, but that's, we're getting some weakness in this area because, and we're seeing that in the housing starts. You can see crude oil and the other areas, looks like it's bouncing, and that's obviously a positive for MLPs, as well as commodities as a whole, which is coming up off of an oversold cluster, which tend to be more of a reversal signal, especially with the divergence we have developing on the intermediate line here, tends to be more of a reversal signal than you would expect. So commodities doing well. You can see U.S. stocks, like I said, were up, and it's not just the S&P. Small caps, mid caps still continuing to do well here, and your more pinpointed areas of stocks, real estate, preferred stocks, dividend stocks lagging behind. Those are kind of the areas where people go to for safe haven with their yields and their protections, and they're down there. So it's a kind of a risk on type of a move. There's your growth stocks kind of lagging behind, but still outpacing all these other safe haven asset classes. So again, a weak number, and a lot of people kind of jumped on that to say, we're not very strongly bullish, or the economy is not going to be jumping up any higher, or not as strong as the markets would suggest, and the Beige Book even kind of referenced a weakening economy, especially with the tariffs that's hanging over the heads of a lot of these manufacturers. But all being said, the GDP estimates came out again, and they're still stuck there at 4.5%. So, it's still not enough. And the economic surprise index is flat. It's not strongly negative, but it's flat. And keep in mind that it's hard for economic indicators to continually beat estimates to the upside. You usually start, after you get this kind of a spike move, the strong economic growth occurs over here, right? You'll start to beat strongly economic estimates as these indicators start to bounce and move higher, and then those indicators will start to moderate at higher growth levels. And as of right now, that's kind of what we're seeing. So positive development for stocks, and as I showed you before, when you look at the foreign markets, U.S. is still the king right now. At least right now, of course, not always, but in terms of relative performance, the S&P 500 has got the strongest intermediate posture, and nothing else is even close. I mean, the closest is Canada and India. And there's India kind of at a flat moving average, and then here's Canada also kind of in a flat, tight range, sideways range, and a flat moving average. The S&P is trending higher. China is close to its lows of the past 3 months, and South Korea is close to its lows of its past 3 months. Germany and France, they're well off their lows, so they're showing some relative strength. Italy, not so much. Brazil trying to get going off of its low points, and Russia kind of pulling back with that, a little bit of a short-term move. But again, Fibonacci pullback as of right now, and you can see a lot of negative numbers here: negative 14%, negative 12%, negative 10%, negative 7%, 5, 4, 4.5, 21, 5, and the S&P is up 4%. So, it's the place to be in terms of relative performance. So, if we want to be bearish on stocks for whatever the reason may be, you need to have something to take its place. And right now, from a asset class standpoint, as maybe commodities will eventually start to make another run again. But from an asset class standpoint or from a foreign market, there's got to be an alternative. And right now, there just aren't any viable alternatives for investors, even foreign or U.S. investors, that leave U.S. stocks and go elsewhere, which is a positive sign for posture going forward. All right, so from a sector rotation, you can see over here on the left, financials and industrials, two of kind of beaten up areas during this inverted yield curve, trade war narratives that's been out there. Here we go, U.S. sectors 12 grid. You can see that they were the only really outliers to the upside today, and financials kind of trying to make a move up. Still got a lot of headwind here in the past few months to try to get up above. And of course, industrials is barely getting above its moving average. But rising moving averages, getting above 50, so things are starting to be on the up and up. We looked at a financial company in our previous market outlook video. Those are the only two areas that outpace the markets. Everything else is relatively flat. On the other end of the spectrum were your safe haven areas, utilities and staples. Now they've got some strength to kind of roll off a little bit, and real estate, as I mentioned, pulling back and result of some weakness in the sector. But again, pulling back to support, nothing on a relatively strong trend itself. I mean, yeah, it's on a bearish posture right now, but weak considering it's just barely below 80. And utilities and staples are still strongly bullish despite today's pullback because they're still above 80 on the intermediate line. Of course, materials is a weak area that we want to steer clear of right now. It's below a falling moving average, one of the only areas below a falling moving average. And you can see energy also another stock that's below a falling moving average according to the red line there. And technology giving us that overbought cluster, discretionary giving it to us yesterday. Those are strong areas. They've been strong areas. They continue to be strong areas for the market. Healthcare also a leader in the market. That's one of the areas that was relatively flat today. But those three sectors continue to show relative strength, whereas the previous kind of sector rotate, the previous safe haven leadership is giving up some of that strength and giving it back over to these areas, and like commodities and energy, you know, kind of getting hit with the strength that we have continued to see in the U.S. dollar. Go back to just a regular 1-year chart and look up, I think it's $DXY actually. There we go, the U.S. dollar, some strength there, but again, don't put a lot into this strength in the dollar. That's a inverted, that's a head and shoulders pattern developing, and lots of long upper shadows heading into some resistance area. I mean, we'd have to significantly break out above this area for us to be, you know, strongly bullish in the dollar. You've got, you know, the bearish divergence setting up with the intermediate line coming up off of an extreme low on the momentum line here. You know, I'm not too bullish on the dollar for this technical patterns are developing, and of course, if and when the dollar does roll over, then you'll see areas like materials and energy take off again. But until then, they're areas that we don't want to be. They're not market leadership right now. They're kind of lagging, and like I said, two of the only sectors that are actually below a falling moving average right now. All right, one of the stocks that's in that sector, in that strong sector in technology, and also happens, you see, to have a cluster itself with its short-term sentiment looking very strong, just starting to bounce and breaking out above 40. You can see 40 kind of was a support level for the stock right in this area, and we gapped down sharply below it, came back up and filled in a lot of the gap, but we're kind of struggling right around there. Where you can see my cursor is, and then today's breakout on pretty decent volume. If you look at the 3 green arrows for Teradyne, you can see you got a spike in volume, 1.5 times the volume. So good move to the upside there. Can be used for a trend trade, right? If you want to look at it for a run back up into these levels. Considering the seasonality of the markets and you know, weakness that may come, at least in the short term, if not, you know, sideways action like I mentioned to you before, like we had last July and into early August. Then we can say, okay, well, if this 40 level holds, and we can sell the 40 put at that level and buy 38 for protection. Not too wide of a spread, a little bit wider on the 38. You can see it gets wider as we go away from at the money. There's more volume traded here, so you have to kind of fiddle around to see where you're going to get filled in at. The ideal scenario is actually to get filled in at 47 cents. Which is the 30% return on risk on a $2 wide spread. You can see what that does. Here we go. What it does, if I set my slices to break even, it gives me a decent probability of success in making money. And again, if you're going to make money on this, it's going to be maximum gain. It's a very small window there to get less than that maximum gain there. And of course, we want to keep our losses as much as we can to $47. You know, right around that area. You can see that crossover point where we'll lose about $45 no matter what day we're trading. Also happens to be below 40. So we have to break down into this 39 area, back to that moving average, reverse this breakout on high volume. You can see it too. I mean, if you look at like the Bollinger Bands, you know, they're showing a little bit of a breakout move, getting up to above, close to above 100 there, with the bandwidth rising. And of course, looking at the DMI, another indicator we look at frequently, crossing above 25 with the ADX rising too. So, you know, a positive move ahead of earnings. We do have earnings coming up, so something to kind of be aware of, to the point where we can manage risk on this and do, you know, a smaller position than normal, knowing that it's got pretty decent odds already as it is, and a pretty decent support level to try to help us stay up above. How far up above we go, we don't know. You know, the volatility is not that high for this. I mean, it's, you know, around 40% and drops down to 30. So it's, you know, the market's looking for a move, but you know, it's not a significant mover on earnings. Can stay within its range a little bit. There's a pop out, and this one came down a little bit on its, and that's the biggest one that we're now kind of reversing. So the market's got a better opinion heading into this earnings announcement on Teradyne than it did heading into this earnings announcement, where the volume stock had been dropping. So, if we're going to speculate on a move coming out of a big move coming out of earnings, it could definitely be to the upside based off the trend of the stock heading into it. And for that matter, today's somewhat breakout move, getting up above this resistance level with some volume, also ahead of that earnings. So the market's anticipating a decent move. Now, it might be one of those moves where you get a breakout and then we knee-jerk reaction, or we don't, we got the move, we got the bullish move, and we get a pullback because we've had a lot of the buying already. See, that pullback there only took out about 5 or 6 days of buying. And then we go sideways and then slowly trend higher, similar to what we expect the market to do based on the seasonality. So if it does something like that and holds 40 and bounces up the rest of this week and holds 40 post earnings announcement, holds that support level, then that's what we want to see on that particular trade. All right, with that being said, I want to hear from you now. I'll turn it over to you guys and love to hear your thoughts. There's a link popping up in the top right corner of your screen that will take you to our forums at marketscholars.com, the Market Outlook forums. Make sure you subscribe to our site. You can do that for free and participate in the forums there. Love to hear your thoughts on the market posture, on today's trade idea. What do you expect from the seasonality here heading into after this week, heading into the end of July and August. All your thoughts. Do you have any questions or comments? You can post those in the forums too. Of course, there's also a link down in the section, the comment section below, the first comment there that I've got pinned to the top that will take you to the forums for tonight's Market Outlook specifically as well. Remember to subscribe to our YouTube channel, click on the thumbs up icon, and comment on anything that stands out to you. Follow on Twitter for more content like this, and join our Market Outlook community on Facebook. Have a great evening, everybody. We'll see you all next time.